Welcome to our new IFRS Educational Fund Service. It's an initiative of OJ Inspection Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standard IFRS through a multiple choice question and answer approach. It is intended to make learning verification, mastery, and intellectual assurance fun. In this session, we shall be considering cumulative set 210 questions to which the answers have been provided on IAS 36. This is a standard on impairment of assets. Viewers or subscribers have 30 seconds to select or choose their answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. The impairment loss to be allocated to reduce the current amount of the assets of a cash generating unit is just applied to A. Goodwill in the cash generating unit, B. Other assets in the cash generating unit, C. Liabilities related to the cash generating unit, D. Equity related to the cash generating unit, E. Profit or loss. Some counts. Ten seconds gone. 20 seconds gone. Time up. Question number 12. In allocated impairment loss, one of the following is not compared to an asset's current amount. A. Historical cost. B. Fair value less cost of disposal. C. Value in use. D. Zero. E. None of the above. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 13. Which of the following cash generating units components is not adjusted for impairment loss reversal? A. Inventory. B. Plant. C. Equipment. D. Goodwill. E. Intangible assets. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 14. An impairment loss recognized for goodwill can subsequently A. Be reversed from a cash generating unit. B. Be reversed in profit or loss. C. Be reversed from the goodwill. D. Be reversed through other comprehensive income. E. Not be reversed. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 15. One of the following terms is not associated with IAS 36. A. Carrying amount. B. Cash generating unit. C. Corporate assets. D. Cost to sell. E. Cost of disposal. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 16. Which of the following terms is associated with the definition of cost of disposal, but not that of cost to sell? A. Finance cost. B. Income tax expense. C. Cash generating unit. D. Disposal group. E. Incremental cost. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 17. For the purpose of impairment testing, goodwill acquired in a business combination is A. Expense in profit or loss. B. Adjusted of intangible assets. C. Deducted from the total of the acquired cash generating units. D. Allocated to each of the acquired cash generating units. E. Not tested for impairment from the acquisition date. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 18. IAS 36 is not applied on items of one of these standards. A. IFRS 6. B. IFRS 9. C. IAS 16. D. IAS 38. E. IAS 40. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 19. Testing of goodwill acquired in a business combination for impairment is A. Done monthly. B. Done quarterly for interim reporting. C. Done biannually for half-year reporting. D. Done annually. E. Is not done given its nature. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 20. For an intangible asset not yet available for use, impairment A is tested annually. B is tested quarterly. C does not exist. D is not tested. E is deferred until completion. Some counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to review the answers. Question number 11. The answer to question number 11 is A. Goodwill in the cash generating unit. The impairment loss is allocated to reduce the current amount of the assets in a cash generating unit in the following order. 1. To reduce the current amount of any goodwill allocated to the cash generating unit. And 2. To the other assets of the cash generating unit pro rata on the basis of the current amount of each asset in the cash generating unit. A is the answer to question number 11. Question number 12. The answer to question number 12 is A. Historical cost. A. Historical cost. IAS 36 provides that in allocating impairment loss, an entity does not reduce the current amount of an asset below the highest of 1. Its fair value less cost of disposal, if measurable. 2. Its value in use, if determinable. And 3. 0. Historical cost is not part of the consideration. A is the answer to question number 12. Question number 13. The answer to question number 13 is D, goodwill. D, goodwill. A reversal of an impairment loss for a car generating unit is allocated to the assets of the unit except for goodwill, pro rata with the current amount of those assets. D is the answer to question number 13. Question number 14. The answer to question number 14 is E, not be reversed. E, not be reversed. IAS 36 provides that an increase in the recoverable amount of goodwill in the period following the recognition of an impairment loss for the goodwill is likely to be an increase in internally generated goodwill rather than a reversal of the impairment loss recognized for the acquired goodwill. Therefore, impairment loss recognized for goodwill is not reversed in a subsequent period. E is the answer to question number 14. Question number 15. The answer to question number 15 is D, cost to sell. D, cost to sell. Cost to sell is not a term associated with IAS 36 impairment of assets. Rather, it is associated with IFRS 5 non-current assets held for sale and discontinued operations. D is the answer to question number 15. Question number 16. The answer to question number 16 is C, cash generating unit. C, cash generating unit. Cost of disposal is defined as incremental cost directly attributable to the disposal of an asset or cash generating unit, excluding finance cost and income tax expense. Cost to sell is defined as incremental cost directly attributable to the disposal of an asset or disposal group, excluding finance cost and income tax expense. Cash generating unit is a term used in the definition of cost of disposal, but not contained in the definition of cost to sell. C is the answer to question number 16. Question number 17. The answer to question number 17 is D, allocated to each of the acquirer's cash generating units. D, allocated to each of the acquirer's cash generating units. IAS 36 prescribes that for the purpose of impairment testing, goodwill acquired in a business combination from the date of acquisition is allocated to each of the acquirer's cash generating units or group of cash generating units that is expected to benefit from the synergies of the combination, irrespective of whether other assets or liabilities of the acquiree are assigned to those units or group of units. D is the answer to question number 17. Question number 18. The answer to question number 18 is B, IFRS 9. B, IFRS 9. IAS 36 does not apply to financial assets within the scope of IFRS 9 financial instruments. It, however, applies to items measured using certain bases in IAS 16, 38, 40, and IFRS 6. B is the answer to question number 18. Question number 19. The answer to question number 19 is D, done annually. D, done annually. Testing of goodwill acquired in a business combination for impairment is done annually. D is the answer to question number 19. Question number 20. The answer to question number 20 is A, is tested annually. A is tested annually. IAS 36 requires that an intangible asset not yet available for use be tested for impairment annually. This same annual testing requirement applies to intangible assets with an indefinite useful life. A is the answer to question number 20. That is all for this set 2. Thank you for joining us for the set 2 of IAS 36, Impairment of Assets. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the service are reserved for OJ Inspection Limited. Thank you once again and bye for now.